conversation. Thank you very much for giving us some insights into why the company is looking at the fluorination space in a big way. Thanks very much. That's Anupam Rasayan. Okay, let's get back to the market conversation. The market continues to be in a fairly tight range. That's what's playing out this morning. Gautam Shah, founder and chief strategist at Goldilocks Premium Research, is with us on this leg of the show. Gautam, first of all, I think congratulations are in order, because I very clearly remember the last conversation that we had when you were on the channel, and you were very cautious. You were talking about downsides. You were talking about levels like, I think, 17,300, 350. Now, all those levels have come and gone. They've all been broken. What happens now? Do you think we are ripe for a bounce, or do you still see more weakness?
Good morning. Thank you. Well, as an analyst, you have to call a spade a spade. That's our job. And I think the evidence that we've seen on the table for the last 2.5 months clearly suggests that this is a classical downtrend in every sense. I mean, look at the kind of weakness the market sees on the down days, the momentum, the participation, the volume activity, and, how fragile the market looks, on the up days. In fact, hope is sold and marketed, while the markets go through that mini pullbacks from time to time. But resistance levels have come in and, protected the downtrend every single time. So even as things stand, there are no signs of bottoming out. I think the break of 17,300 is a very important development from a medium-term standpoint. The kind of participation that we've seen from Reliance Industries and Bank Nifty in the last few sessions is not good at all. So I do believe there is more downside. There is some minor support around 17,100. But I think for a very long time, we have been working with a minimum target of about 16,800. So I think we are going to get there. Another big problem was that India corrected almost on a standalone basis till a month back. So we had our own issues to deal with. And now with what has happened globally around the SVB episode, things look quite ugly on the global markets as well, put together US and Europe. So things don't look good. I don't think this is going to resolve in a hurry. Expect a lot more weakness before things get better.
Okay, so it could get worse before it gets better. We definitely don't like to hear that. But when you say it could get worse, right? I mean, what are the levels that you're looking at? You briefly mentioned on the Nifty. You think this recent low of 16,800 thereabouts is something that could be taken out very soon? And I'm more concerned about the Bank Nifty, because now trending well below that 40,000 level. Do you think it could be the leader of the next leg of the downfall?
Sonia, it's already been the leader on the downside on the bank. Look at the action of the last 2.5 months. And I think it's going to get a lot worse, because when I look at the Bank Nifty chart in the context of the rise of the last couple of years, I still feel that there is a lot more weakness. And Bank Nifty breaking 39,600, and if it were to sustain below it for a couple of days more, I think there is easily another 2,000 point downside coming in there. So 37,500 is my number on the Bank Nifty from a medium-term standpoint. And if that number were to come by, it will obviously impact the Nifty. But yes, coming back to the Nifty, 16,800 is indeed a very important support. I'm pretty sure that we are not going to pierce through that number easily. There will be some support. There will be some stopover at that point. But if I have to take a slightly medium-term view, I wouldn't be surprised if the Nifty eventually goes down to levels closer to 16K. So that's probably the reason I say that the risk-reward is still in favor of selling in case of any pullback.
Yeah, but the pace maybe, what's the pace you're expecting, Gautam? Hi, morning. and as Surabhi said, you've got it absolutely bang on. So congratulations. But a lot of it is about timing as well, right? Are you expecting these kind of episodes, which they come once in a while, the bank issue, it kind of sort of does things very fast, right? Helps things on the way up or way down very fast. But if this were to pass and not fester, the underlying structure is weak, as you're saying, has been weak for a while, even before this. Will the pace again go into slow mode? Lots of sort of intermittent rallies, which gets sold into. I mean, it goes back into slow motion in that sense.
Prashant, the beauty about excuses is that they are always unforeseen till they actually happen. And I think the beauty of technical analysis is that we are able to get a hang of something wrong being somewhere, looking at the demand-supply situation. And that's been the case for India and for the rest of the world. But I think, let's not forget, the first half of March was actually very boring. I mean, you had a scenario where India VIX was at a 52-week low 1 week back at 12.5. And even today, India VIX is somewhere between 15 and 16. And my experience of a couple of decades tells me that markets usually don't bottom out till you see a surge in India VIX well into the 20s. So I think the pace has only increased now. And I think this is going to be a trending market. It's not going to be a boring market anymore. You will see pullbacks from time to time, no doubt about it, because the market will try to confuse. There are just too many things happening in the world at this point of time, but the trajectory will stay down. And I think below 16,800, there are just no numbers still about 16K. So for now, let's just prepare for that number and then we take it one step at a time.
Okay, Gautam, we will leave it at that. Thanks a lot for joining in and giving us your views. This is a market that could get worse before it gets better. There's still a lot of caution, at least that's what the charts are indicating. So we have to perhaps brace ourselves for more pain or maybe more pain.